Yo, what's really good, people? It's Curtis back with another portfolio update. It's been an eventful week since the last update, so I thought to give you a quick rundown on some of the key headlines, what's been going on in the market, and what I've been doing, and what I also plan to do over the next couple of weeks. Also, before I get into that, Joshua from the gram, big shout out to Joshua, mentioned I should do a Q&A and answer any of you guys' questions live on a video, so I plan to do that. So if you have any questions, please hit me up on Twitter or Instagram. The handle is at Infinite Investors, or put it in the comments of this video, and then what I'm going to do is do another video just answering all of those questions. So you can ask me whatever you want, and then obviously I'll try and answer them as best as I possibly can. But let's get into this video. Please like, please comment, please subscribe if you're new to the channel, and we shall crack on. First of all, David Marcus. I don't know if you guys know the name, but David Marcus is the VP of Messaging Products at Facebook. And he's also on the Coinbase board of directors. And this week he sat in front of Congress, and was having to ask, he was being asked multitude of questions about Libra. It was all about Libra, and he was just basically getting hammered from this senator to this congressman to this congresswoman, etc., etc. And the biggest thing that sort of became very, very apparent and clear to me was just the ineptitude of the vast majority of Congress people. I mean, some of them refer to Bitcoin as a website. One of them called Nigerio. I mean, just shocking, basically. There was like one or two good points. I think the one good point that I sort of took away from it was someone mentioning that they kind of put him in a very awkward position where he answered like three questions which he answered truthfully, and then she said based off those questions it kind of means that you're not doing the mission. Which, so basically, to cut it short, Facebook is to serve the unbanked, which basically means there's a whole bunch of people, or sorry, Facebook Libra, there's a whole bunch of people in a whole bunch of countries that don't have bank accounts that use Western Union and other money transfer services. So Facebook is apparently trying to help them. But in fact, if it's not a bank in itself and it doesn't operate as a bank, and you don't actually earn any interest on having money in Libra, then you're not really helping the unbanked. All you're really doing is just exploiting them the same way those other brands are, but maybe at a cheaper rate effectively. So there was a little bit of an important point that came out of it. But ultimately, what that kind of resulted in is a tank in share price. Not a tank, a fall in share price for Facebook, because I think anytime anyone goes in front of Congress and is getting grilled, even if some of the things don't make sense, it just never really looks good on the business. And I actually think he did a pretty good job, if I'm honest. But obviously, with their previous privacy scandals and all of the other uncertainty that surrounds Facebook, there was a bit of a drop in share price. So I think there's been about a 3.5% drop. I bought another share in Facebook, as you can see. So I bought another share, but I did it a little bit too late. However, I will probably add to it again at the end of the month, and I think it's still probably going to keep on falling for a little while, and I'll just sort of take advantage of that, because I still think long term it's probably a good stock to continue to hold. What the funny thing that came out of this is that this Facebook Libra issue had a positive impact on Bitcoin, which is interesting. It's like, you know, they thought Bitcoin was an evil, but now they think Facebook Libra is a bigger evil. They want to then say that Bitcoin's actually good. So it's a bit of an interesting one. Next is Imperial Brands. So as you can see, Imperial Brands for me now is sitting at only a £35 loss, only at a 3.38% loss. Now that is a mixture of two key things. The first is Imperial Brands announced a share buyback. Now, for those of you that don't know what a share buyback is when a company, so in this case Imperial Brands, decides to buy back a number of shares for themselves. So because they can't own any shares, what they do, they reduce the number of outstanding shares that's available by effectively buying them. So that obviously comes out of their cash balance. What that then means is that the number of outstanding shares that are in the market generally reduce, which then means the value for each of the shares that people do hold tends to rise, or will rise. So there's a number of reasons why a company does it. Most people and most analysts think it's done with negative intention. So it's done to kind of cook the books and improve financial ratios. So as an example, return on assets will improve because cash is an asset. And if they're spending 200 million buying back their own shares, they have 200 million pounds less cash. But by having 200 million pounds less cash, whatever return they were getting on the money before, it now seems like a higher return because there's less cash that it's based off. And simply return on equity also improves because now there's less outstanding equity. So obviously shares being equity, if the shares reduce because they've bought some of it back, then whatever return they were having before is now over a smaller amount of shares than it was a larger amount of shares. So in that case, it makes their return on assets, their return on equity look good. Companies also do it if they feel that their stock has been disproportionately affected by market conditions and been discounted too heavily. Now, this can happen just from, particularly just the market, or it can happen from, say, their last earnings. And I think that is the case with Imperial Brands. You guys know their last earnings report wasn't good and their shares took a hammering. We went from seeing share prices at 26, 27. So, they're losing 25% of their value in like 3 months, etc. So, or maybe just less. But because it was such a significant amount, they obviously wanted to use some of that earnings, some of that cash flow they had to buy some of their shares back. Anyway, the net result of that is that my share price has increased. The share price has increased, and obviously the profitability for existing shareholders has increased. So if anyone's holding Imperial Brands, you may have seen an increase, and that is pretty much the majority of the reason. The second part of the reason for my increase is that I did another round of investing, of my interim investing. So I bought 9 more shares, and just because it's been so undervalued and been so low, I decided just to average it down. So I was planning to do that anyway. The share buyback was just an additional perk, and so that means my overall increase was about 5% increase in Imperial Brands, which is good, which is just leaving me at a much minor loss than what it was before, because I don't really like to sell in the red, especially for a long-term play. So I will rather average it down and then break even, or I will just hold it until it does improve, such as I did with, say, sentiment, etc. So look out for share buybacks with any of your particular stocks that you might hold if there's any news or announcements, because it generally can have a good impact on your performance. Speaking of performance, the performance of gold has just continued to increase. We're at a record high. Why? Well, the Fed interest rate cuts is seeing investors put money into gold for a return. And as I mentioned in the last video last week, there is a halo effect that is having on gold miners, and sentiment rose again for me, another 3.5% this week, which you can kind of see from this graph, but I've calculated the actual figures. I have no plans to sell. I think, quote unquote, I hope really, but I do think that this will continue well into the year. Generally with these Fed talks, they just linger for so long. Like, it's not something that happens overnight. So I think just the speculation alone will increase the share price. And then if it does actually happen, then you will see a further bump. So yeah, I think I'm definitely going to continue holding sentiment. It's been doing really well for me, and it's continued to increase. So I'm really happy with the return. To be honest, I never added any money to sentiment because I thought it was too high at the moment. But what it did remind me is how I should have added when prices were sitting around the 85p mark. So there was times when I had the stock, back in February or January or March, whatever, and it was sitting around the 85p mark, and I was sweating like a policeman in Peckham. But I didn't add any more money at that time, and I should have done, because it was dirt cheap. And now I kind of feel it's a little bit too high to add a bit much money, bit too high to add more money. although I do think it's going to increase. So I'll just add in my normal round of investing at the end of the month, but I'm not going to kind of do another whole big round specifically for sentiment to try and take advantage of it. But yeah, we'll see how that goes over the course of the year. I did buy a new stock, which is Snapchat. Snapchat did have quite a big correction, as you can kind of see from the graph. So I did buy too high. I kind of bought at that sort of high bump that you can kind of see, or yeah, you can see in just sort of adjacent to the 1 year icon. That sort of bump is where I sort of bought. And it started to drop. The technical analysis actually told me that I shouldn't have bought, but I think just the FOMO that I had previously of planning to buy Snapchat kind of kicked in. And to be honest, because I didn't put that much into it, as you can see, like it's a £7 loss, which isn't the worst thing. So I'm not too fast. I didn't buy that many shares, and so when it does look like it's consolidating and bottoming out, then I will decide to add a bit more shares, just so that, you know, it benefits better in the long run. So yeah, I'm not too fast, but yeah, Snapchat. So now I hold 20 different stocks and ETFs. That's kind of how the portfolio is looking at the moment. I also added money this week into First Solar, which has also continued to rise as well. So I'm really happy. But as you can see, the percentage has dropped to 6.71, just because obviously I bought more shares, but the share price is still continuing to rise, which is good. I also bought into Barclays and to Lloyds. So Barclays and Lloyds have been two stocks that I've been avoiding putting money into, just because their performance have been just quite dire, to be honest. However, what I decided to do in this round is this interim round is add money to them while they're sort of low and try and take advantage of that. I also added money into Vodafone just because it's been performing poorly. So similar to the Imperial brands situation, while it's performing poorly, it is obviously undervalued. It is very, very cheap, so it is an opportunity to buy and load up on shares, so that, you know, not only obviously when the share price rise I get that capital gain appreciation, but also when it comes round to next dividend payments and dividend season, then I've got a lot more shares, and whatever the dividend per share is will mean that I'll get a better return, which will be positive. So at the moment I'm sitting at just under a 5% return. It was 5.5% before I did the round, but obviously the interim round would bring the percentage down. So I was sitting at about 5.5%. It's now about 5%. I think the market average at the moment is 5.96%, according to Simply Wall Street. So it's getting better. The portfolio is getting better. I think we can thank Imperial brands for that, to be honest, and we can also thank Sentiment pretty much for that, and we can also thank Barrett has gone up as well, continued to rise. I didn't add any money to Barrett, but Barrett, since the last time I invested a week ago, that's gone up like another 1.5%. so again, you know, some stocks are just performing really, really well, and Barrett's outlook in terms of their earnings is going to be really, really strong. I think they've even given guidance to say like they're hitting all of their targets, they're surpassing it, to be honest. So I'm expecting their earnings to be gone. Actually, maybe they've done. Yeah. Anyway, they're expecting it to be good. So yeah, that's basically what's really been happening in the world of the stock market in the last week. Generally, I don't do weekly portfolio updates just because I think sometimes not enough happens for it to be a meaningful video, but I think enough has happened this week for me to sort of produce this video. So I hope you guys found it interesting. If there's anything you want me to cover off in these weekly updates that I don't cover off, then please let me know. I mean, I won't talk about stocks that I don't hold unless I'm planning to buy them or I've just sold them. So it will be either about these stocks or something affecting them in general. But yeah, if there's anything you want to cover off, leave it in the comments. But don't forget to put anything in the comments, tweet me your questions, send me your questions via Instagram, whether it's DM or under the comments, or leave under this video, and then I will do a Q&A video answering all of your questions. Also, you can add the questions to the community. The link will be in the description for you to be able to do that. Other than that, the next set of videos you will see coming, I've got a few videos on some of these stocks, but I'll also have some videos on investment strategies, which I know you guys have been waiting for. So that's going to come during the course of this week, so look out for that. Other than that, Take care, have a great weekend, be safe, and last but not least, happy investing. Peace.